In this video, we'll be discussing the impact of inflation on your money. Inflation is the rate at which prices for goods and services increase over time. When inflation is high, your money loses value, which means that you will be able to buy less for the same amount of money. For example, if inflation is at 2% and you have $100 in your savings account, in a year's time, your $100 will only be able to buy the same amount of goods and services that $98 would have been able to buy the year before. Inflation can also affect your investments. If you have invested in stocks or bonds, they may provide a return that is higher than inflation. But if the return is lower than inflation, your investment will lose value in real terms. One way to protect yourself from inflation is to invest in assets that have the potential to appreciate in value, such as real estate or stocks. Another way is to invest in assets that provide a return that is higher than inflation, such as high-yield savings accounts or bonds. It's also important to note that inflation can vary from country to country and from year to year, so it's important to keep an eye on inflation rates and adjust your investments accordingly. Another way to protect yourself from inflation is through diversifying your investments. Diversification means spreading your money across different types of assets, such as stocks, bonds, real estate, and cash. This can help to reduce the risk of losing money due to inflation because if one asset class is performing poorly due to inflation, the others may be performing well. Additionally, it is important to review and adjust your budget regularly to account for inflation. As prices increase, it may be necessary to cut back on certain expenses or find ways to increase your income in order to maintain your standard of living. Another strategy to hedge against inflation is to invest in commodities. Commodities such as gold and silver have historically been considered as a hedge against inflation because their prices tend to rise when inflation is high. It is also important to consider the impact of inflation on your debt. If you have a fixed-rate loan, such as a mortgage, your payments will not change as inflation increases. However, if you have a variable-rate loan, such as a credit card, your interest rate and payments may increase as inflation rises. Inflation is an important aspect to consider when managing your money. By understanding how it works and taking steps to protect yourself, you can minimize the negative effects of inflation and ensure that your money maintains its value over time. In summary, inflation can have a significant impact on your money, but with proper planning and understanding, you can take steps to protect yourself by diversifying your investments, reviewing and adjusting your budget, investing in commodities, and considering the impact of inflation on your debt. Another important aspect to consider when it comes to inflation is its impact on your retirement savings. As you're saving for retirement, it's important to take into account the potential for inflation to erode the purchasing power of your savings over time. To ensure that your retirement savings can keep up with inflation, you may need to save more or invest in assets that provide a return that is higher than inflation. There are several investment options that can provide a higher return than inflation, such as stocks, real estate, and high-yield savings accounts. When investing in stocks, it is important to consider the company's fundamentals, such as its earnings and dividends, as well as its growth prospects. Real estate can be a good hedge against inflation as property prices tend to rise when inflation is high. Another option to protect your retirement savings from inflation is to invest in index funds or exchange-traded funds, or ETFs, that track a specific market index. These funds provide a relatively low-cost way to invest in a diverse range of stocks and other securities that can help to offset the effects of inflation. Inflation can also have an impact on the amount of Social Security benefits you'll receive. Social Security benefits are adjusted for inflation each year, but the cost of living adjustment may not always keep pace with the actual rate of inflation. In conclusion, inflation is an important factor to consider when planning for your retirement. By understanding how it works, taking steps to protect your savings, and investing in assets that can provide a higher return than inflation, you can ensure that your retirement savings will be able to keep up with the rising cost of living. In this video, we discussed the impact of inflation on your money and how it can affect your savings, investments, and retirement. We also provided some strategies to protect yourself from inflation, such as diversifying your investments, reviewing and adjusting your budget, investing in commodities, and considering the impact of inflation on your debt and retirement savings. Remember that inflation can vary from country to country and from year to year, so it's important to keep an eye on inflation rates and adjust your finances accordingly. Thanks for watching, and stay informed to make the best financial decisions for yourself.